Bloomberg Audio Studios. Podcasts, radio, news.
This is Everybody's Business from Bloomberg Business Week. I'm Max Chafkin.
And I'm Stacey Vanek Smith.
Hey, Stacey. Summer's here, I guess.
Summer's here. Yes, it is.
It's not, though, but Memorial Day happened, and I went camping, and it feels like we're entering a new phase.
Yes, it has been warming up a little bit in New York, which has been very welcome. And typically, the summer is when the news slows down a little bit. Not now, at least not so far this week. The business news has been really big, everything from Tinder to tariffs.
There was a huge court ruling essentially blocking most of Trump's Liberation Day tariffs, saying he was essentially not following the law that allowed him to make those tariffs, that this was an issue of presidential overreach.
Yeah, in fact, the lawsuit was brought in part by a group of small businesses, which was really interesting to me. You know, like small businesses strike back. The Trump administration appealed the decision, and appeals court's looking into it. Last we heard, the tariffs will be going ahead for now. It's all tied up in courts. But Max, the little guys, they're putting up a fight.
They're going to lose, Stacey. We're also going to talk about money and the Trump administration and the way that Donald Trump has used crypto both to create a really big sort of political piggy bank as well as a potential personal piggy bank.
Yeah, we've got Stacey Marie Ishmael coming in to talk crypto. And, well, very strange coins seem to be getting issued by the day. Actual coins, Max. Actual coins are going away.
And our underrated story of the week is going to be about the big way that Tinder is going to turn things around, get those youngs to start swiping.
So, Max, the biggest economic story of the year so far has definitely been tariffs. It's been just a central pillar of the Trump administration's economic plan. And he's put them in place on just a massive global scale and also then kind of unput them in place.
Yeah, I mean, at the beginning of this week, everyone was talking about all the ways in which Trump was kind of wimping out on tariffs. And then the International Court of Trade, which was a court I had never heard of,
Yeah, me neither.
essentially said to all those people, hold my beer, and blocked the tariffs.
Yeah, a dozen states came together and a handful of small businesses. They brought this suit. There was like a wine shop and a fish wholesaler and a bicycle shop. And they said the Trump administration did not have the authority, that it was a presidential overreach to levy these tariffs. Trump has been using this act from 1977, which says a president can put tariffs in place if there's an emergency. Otherwise, it has to be Congress that puts tariffs in place.
This had always felt like a little bit of a stretch. If I understand the Trump administration's logic, there are sort of two emergencies going on. One is the fentanyl crisis, the idea that China is sending the United States fentanyl, sometimes via other countries. And then the other is just
and also
the
Mexico and Canada.
Yeah. So, and then the other is just the trade deficit. It's like, hey, we got an emergency because the trade deficit is so bad. Court essentially questioning that logic.
The Trump administration appealed the decision. Now an appeals court is looking into the case. And last we heard, as of Thursday evening, the tariffs can go ahead. So it's like a pause to the tariffs.
There have been a lot of those lately.
I know. But what I did find fascinating about this was that it wasn't the big companies doing this, like the big companies with lots of money and armies of lawyers. It was the little companies that kind of got together and had the guts to take on Trump and the Trump administration. Like, why don't you think big companies went this route?
So I think there are two things going on. I mean, one is that the big companies kind of made this calculation. I mentioned the idea that Trump is going to kind of wimp out or whatever. That's the calculation that the big companies have been making all along, that they will be able to kind of influence him. You know, that they want their tax cuts. They want other policies that they think Trump is going to give them. And their plan is to kind of negotiate this. And maybe the more important thing is this hurts small businesses like way more than it hurts big businesses.
Yes.
Big companies, they have tons of capital. They can fly in, several months worth of inventory while they send their lobbyists to Washington to try to negotiate an exemption. They have other supply lines. Apple operates factories in India, right? They can shift production to countries with other tariffs, right? Trump obviously has been trying to thwart that.
And they can eat some of the costs for a while if they need to, just to keep customers coming. They've got some flexibility cash-wise.
And like small businesses are not able to play that political game. They are not able to play that inventory game. They're just getting like blown by these wins, probably harder, I think, than anybody else. A lot of people talk about this as a tax on consumers, which of course it is ultimately, but I really think it's these small companies. You think about like a kind of typical Shark Tank business. Somebody who has some idea and like contracts with a supplier overseas and brings it here. And like that business is in crisis right now.
Yeah, and small businesses, they employ like 40% of the people in the U.S. I mean, this is a huge part of our economy, and almost all of them get some kind of goods or service from overseas. And like you say, they don't have the financial cushion, the options, the political capital to go to Mar-a-Lago and have dinner with the president that big companies do. They just have fewer avenues to push back against this. I have been talking to small business owners for the last couple of months about tariffs and the different impacts that it's having on their businesses. I spoke with one man, this guy, Jean Pascal. He owns a flower shop in LA. And he was saying that all of his different flowers have different tariffs on them now. He gets roses from Colombia and orchids from Thailand. So every single flower he has to calculate a different tariff on. And packaging is almost entirely from China. He's getting cellophane to wrap around the flowers and boxes from China. And he said he looked into making those things in the U.S. or to getting U.S.-made products to try to get around the tariffs. But it was so much more expensive to do that he came up with this interesting solution. Here's what he told me.
So now I have to send it to my father in Canada, and then I ship it again from Canada to here. So twice the shipment plus a small tariff from Canada plus the tariff from China to Canada is less than shipping it straight from China. So now we have to just jump hoops to get things.
Jeez.
That's just the cellophane and the boxes. He said he spends like $15,000 a year on those things. It's like little things you don't even think about that small businesses are dealing with and that are making a huge difference to their like profit margins and bottom lines.
The thing is, too, remember a few weeks ago when Amazon seemed to sort of briefly consider taking what would have been kind of a fairly modest step of telling customers about this. And then they were like, oh, we better not, wouldn't want to rattle the cage too much. And meanwhile...
I mean, actually, that's interesting because Jean Pascal decided he wasn't sure what kind of upcharge to put on his flowers. And so he decided he was just going to put a $10 tariff fee on all of his bouquets. And he said he's not really sure how customers are going to receive it, but he said things are just changing so much and so fast that he's, can't deal with all the uncertainty and kind of had to cushion by adding $10 on, which of course pushes up prices for customers too. This is how, tariffs kind of trickle down to all of us. And it's like every business. I talked to this woman, Erin McKenna. She owns bakeries in Florida and California. She imports a lot of her ingredients from Europe, obviously chocolate and stuff like that, but also the Philippines and India. And I asked her to go through some of her ingredients that she was importing. And here's what she said.
So let's look at coconut milk, $78. That's per case. It was $64.85
a few months ago.
Yes. So that's a lot. Of course, there's cinnamon. I actually haven't even looked at the price of cinnamon. I can't look.
It's gone up a lot because she gets her cinnamon from India. And she said she just doesn't actually feel at this point like she can pass the cost along because she feels like prices have gone up almost by a third since the beginning of the pandemic. And she says at this point, people are upset, like customers are angry.
So what's she doing? What is the recourse here?
She was thinking about maybe experimenting with new recipes or making smaller versions of all of her desserts, which, of course, shrinkflation. Yes. I mean, this, of course, is what we see as customers. But she said, she just didn't feel like whatever happened, she could raise her prices.
We actually have a chalkboard in the back. We put a little ding by it anytime somebody's like, how much? Wow. And the wows really psychologically get to you.
It doesn't sound like you feel like you can just easily pass rising costs along to customers.
No, I don't think so. People take it really personal. And we're just trying to stay in business.
I think one thing where Trump has been very successful is kind of like picking on kind of unpopular targets, whether it's Harvard or big law firms or even like big companies. It's like hard to cry tears for Harvard University or like one of these big corporate law firms or even like Walmart when Trump says, oh, Walmart's got to eat the tariffs. But you're telling this florist to eat the tariffs. You're telling some like cookie baker.
I know.
They can't eat the tariffs. They're just going to eat less.
Yeah, and we are going to eat less because of the tariffs.
Portions.
Yes. So, Max, the tariffs were, of course, huge economic news. But we did also get some smaller economic news, which is also important. The penny is going away.
Oh, Stacey, we're still talking about the penny?
I'm
good riddance.
The penny. No. I feel like this is actually like a really sad day. It's the oldest coin that we have in the U.S. It's almost as old as the country itself. It's part of our history.
Yeah, but it's only worth a penny, and it costs, I think, 4 cents to make. Nobody cares about pennies anymore. And if they stop minting them, they're going to save like $55 million.
I know.
Which is not that much money, I guess, in the scheme of a country.
It's like a rounding error.
Yeah, with trillions of dollars.
But a penny saved is a penny earned.
And that is what we will lose, Stacey, if this happens. And it is happening.
I know. But also there's like an inflationary risk if you take the penny away because it probably means that prices are just going to get rounded up to the nearest nickel. And now everybody's going to be coming for the nickel because it costs like 14 cents to make a nickel.
I mean, we should just get rid of all coins, right?
Max! That would have a huge inflationary impact. You want to get us to $50
I don't
eggs.
Make economic policy, Stacey.
Economic issues aside, I feel like there's like a cultural heritage thing at stake here. I mean, it connects us to our past, the founding of the country, plus all of the lore around the penny. If you find one, it's good luck.
Yeah, you throw them in the fountain and wish for something.
I'm so glad that you brought that up, Max, because I went to a fountain to talk to the people of New York about their feelings about the end of the penny. Bethesda Fountain, it's in Central Park. It's very famous. Anyway, I decided to ask people how they felt about the penny going away. What brought you to the fountain today?
These are our grandsons, and figured we'd let them make some wishes.
Oh, or did they wish with pennies?
They wished with pennies.
What did you wish for?
I can't tell you guys. I can't tell you.
Okay, that's good wish policy. What do you think about the penny going away?
There's always been pennies. It'll be kind of weird. Pennies. We save pennies, yeah.
You save them for fountains?
For fountains and these boys.
Does it make you sad the penny's going away?
No, it doesn't make me feel much of anything.
It feels like the end of an era, for sure. Just like kids won't know what a penny is. I don't know. That's crazy.
Penny for your thoughts, pennies from heaven. Pennies are relevant.
Do you guys want a penny you can wish with?
Let's wish together. 2, 3.
There we go.
What'd you guys wish for?
That my boys can continue to do things like this and maybe have pennies for their kids to wish with.
You know, you can still throw pennies, maybe all the more so once they get rid of them. They're just going to be sitting around exclusively for
there
throwing
are still
purposes.
Like billions of them in circulation, and you can still spend your pennies. It's just they're not going to be making any new ones.
Every time it rains, pennies from heaven. Don't you know each cloud contains pennies from heaven?
So from a coin that's going away to the new coin, to the future of
coins
currency.
Being born every day.
I'm talking, of course, about cryptocurrency. J.D. Vance, vice president, was in Las Vegas on Wednesday speaking at the Bitcoin conference. This is the same event that Donald Trump spoke at last year during the political campaign. And this time it was something of a victory lap for the Trump administration, essentially claiming credit for all this support of the crypto industry and asking for more support in the future.
I'm here today to say loud and clear, with President Trump, crypto finally has a champion and an ally in the White House.
That sounds like a big crowd. It's like a big convergence of crypto.
There are a lot of people who love crypto. As our guest,
like a stadium.
Stacey Marie Ishmael, Bloomberg's executive editor overseeing crypto and fintech, can attest. Hey, Stacey Marie.
Hello.
So there was a lot in this speech from the vice president, but it's really just kind of the latest in a series of love letters that the Trump administration has written to the crypto industry. Let me just quickly run through a few. You had the Trump and Melania coins, the dinner about those coins, Trump's stable coin, the crypto reserve executive order, the pardoning of Ross Ulbricht, defanging the SEC. It goes on and on and on. Stacey Marie, how would you characterize the White House's approach to crypto sort of overall? Of all those things, like what has been most important or most interesting?
I would say from an efficacy perspective, if I think about this as like what's been material to the fortunes of crypto people as opposed to what are they happiest about, certainly the difference in the regulatory approach under the Trump White House versus the Biden administration is pronounced. You mentioned the moves by the U.S. and Securities Exchange Commission to largely, I would say, drop or pause a majority of the more significant crypto cases that they had been prosecuting. But we're seeing, enthusiastic rhetoric, shall we say, from the regulators about crypto, which is very different from the Gensler era of, I think you're all criminals who don't like following rules. Right now we're hearing, whether it's the SEC or the CFTC or the IRS or anybody else, essentially encouraging the industry to go out, be innovative, try things. And, from a regulatory perspective, our approach is going to be, we're not going to get in your way unless something egregious or obviously fraudulent is happening. So if you are a crypto insider, you currently feel like, your money was well spent on all of the lobbying efforts and the political donations of the past couple of years.
Just to say, that perspective of Gary Gensler is saying it's all illegal, like that is the crypto industry's perspective.
That is 100% the crypto industry perspective.
Not necessarily what you'd hear if you talk to Gary Gensler. I think what he would say is, hey, we just want them to follow the same rules that other finance companies follow. There was a moment where I saw people in the crypto world sort of getting mad at Trump, sort of saying like, he is making us look bad. Like he's launching coins.
When he launched the Trump coin and Melania coin, they were mad at him?
Exactly. Oh. They were saying like, we're beyond this. We are building a new finance industry. This is like changing global finance, whatever kind of high-minded / crazy futuristic ideological thing.
But he also created the strategic crypto reserve, which seems quite legitimizing.
So I think what you're describing, one, there's a timeline thing, which is President Trump launched the presidential meme coin, I suppose, right before he was inaugurated, right? So it was like a couple of days before January 20th. And then the First Lady launched her own separately through a different entity. And there was criticism then of the fact that this looked like the kind of thing that people criticized the industry for. But the same people who were criticizing it were very careful not to criticize the president directly. The rhetoric was like, he must be getting bad advice, right? Because the industry is in this very interesting place of trying to keep the White House and the president on side while also worrying about whether this is going to affect them negatively or there might be too much competition from the same investor base.
But Trump coin has not done that well, right? How are these strategies working?
One of the first things you learn in crypto that attempting to apply traditional market value analysis to these assets is like the path to pain
it just
and
does
confusion.
Not work. Okay.
So, one way to think about the Trump coin is as a political instrument, a way of declaring kind of allegiance to a president, an ideology, a way of seeing the world. It's very similar to, the folks would buy the Trump collectibles, which featured art of him as Superman or an astronaut.
Or an actual coin. Or there was an actual...
Yeah, there's also the Bibles, there's the sneakers, right? So a lot of the ways that people are approaching Trump coin is this is a way for me to signal fidelity to a particular worldview as opposed to this is going to be the thing that gets me rich. There are absolutely people who made out like bandits in trading Trump coin and other meme coins because there's a lot of room for that sort of speculative arbitrage in crypto. But in so much of the conversations that we're having with people, they're like, this is how they signal that they are aligned with the presidential cause.
There was all this conversation before the Trump presidency about the dangers of crypto, right? Gary Gensler, to some extent, driving that conversation. You also have seen investors really get screwed by buying into, rug pullish schemes or in putting their money in crypto companies that just haven't been good stewards of that money. Mm-hmm. You have Trump essentially throwing the gates open, changing the regulatory environment and telling people, essentially, including Trump and the vice president and Trump's kids, basically, Bitcoin's going to the moon. Like, how much risk is there? I mean, risk to this kind of class of investor and maybe even broader, like, economic risk?
I think that philosophy that you're describing is not confined only to crypto, right? We're seeing the rollback of regulations in other parts of the financial markets, things that affect, fintechs, things that affect payment companies, things that affect whether like Apple and Google are considered to be providing financial services. So to me, the fact that this thing is happening in crypto isn't because crypto is like uniquely special in terms of its regulatory lobbying success, is that the White House policy on a lot of these things is, a very like individualistic, do your own research attitude.
I mean, to me, like the stablecoin thing is almost scarier than the Trump and Melania coin. Like, I feel like we have a framework for understanding that. It's like the sneakers or whatever. Trump is on TV with a commemorative plate being like, hey, this thing might not go up in value, but you sure want to get it. Like, I don't know that there are that many people buying Trump coin who really see it as like a good investment. Stablecoin has stable in the name. It's also basically like an unregulated bank. It just seems like that is where you could imagine real economic risk. It kind of fits the framework that you're laying out in other parts of the financial system.
Can you also just describe like what is happening with stablecoin in a foundational way?
Sure. So stablecoins are the things that international financial regulators, especially people who care about stability, worry about the most when it comes to the incursion of crypto in traditional finance. And it's for two reasons. One, as you say, the name gives people the impression that like this is a totally chill thing. Like it's pegged to a different asset. It's fine. And for certain categories of stablecoins, that's largely true, right? It's designed to maintain a steady value with something like the dollar or the euro or the yen. And the way that it achieves that for a majority of these kinds of stablecoins is the people who issue it hold a bunch of assets that are very liquid. And so if you need to redeem the dollar value of that thing, somebody will go off to their vault, they'll sell their gold.
There's not going to be a run on the bank.
There's not going to be a run on the bank. That's the theory. The practice is not all stablecoins have been created equal. And even the ones that are able to demonstrate that they have the reserves backing them, etc., have been prone to volatility in ways that have stressed people out. So one of the things that's happening in the U.S. is the U.S. Congress is hotly debating some stablecoin legislation that will actually provide more of a framework that would include things like investor protections. Who do you call if your stablecoin dollar is no longer actually worth $1? Hasn't been passed yet. As with
this is the Genius Act.
This is the Genius Act.
Which is like a callback to the Stable Genius thing, I guess?
Yeah, because there's also a Stable Act. There's the Genius Act, there's the Stable Act. They have slightly different provisions. It's very Stable Genius, haha. But this, I think, is a good example of where there is bipartisan consensus that this particular element of blockchain doesn't look like it's going away. And it seems better to have legislation around it rather than not. Now, you've mentioned the Trump stablecoin. That stablecoin is issued by World Liberty Financial, which is the Trump family crypto project. It's largely run by the sons. It's promoted by the president on various social platforms. And it's very, very new. It's, in fact, not officially launched to the public, but it has had some extremely high-profile deals, including the issuance of this stablecoin at the moment.
Is it pegged to the dollar, or what is it?
They describe it as a US dollar-pegged stablecoin. So in theory, it should maintain a one-to-one relationship with the US dollar. What we don't yet have a lot of visibility into is what their reserves look like, right? So the other big stablecoin issuers, Tether, Circle, provide varying degrees of attestations and financial statements that say, hey, we've got X billion dollars worth of treasuries being held by Cantor or BlackRock or whoever. We haven't seen that yet for World Liberty stablecoin.
Yeah, you just hope it's not held like exclusively in Trump wine or Trump sneakers or some other like questionable asset. Last thing, JD Vance, this was in some ways a victory lap. I think he's like saying thank you to the industry for supporting him. But he made a pitch at the end of this talk, essentially for more engagement, like essentially saying to these guys and gals at the crypto industry conference, like, hey, you need to like stay engaged. You need to support us. This political alliance between Trump and crypto, like how big do you think it is? There was an interview in New York Magazine where Mark Cuban, and he actually said the same thing to me a couple weeks ago, but unfortunately New York Magazine got it out before me. But in any case, he said, like, crypto costs Democrats the presidency. And I think there are real questions about, like, how seriously we should take that. Obviously, that's a claim that the industry really likes. But how valuable is this cohort politically to Donald Trump?
I would say financially, it's very valuable, right? So the crypto industry, starting with Sam Bankman-Fried in a different time, really changed the perception of how much money they would give to political candidates. Like, the SBF, FTX era was very much, we're going to donate aggressively to Democrat and Democrat-aligned causes. Under Trump, the industry stepped up substantially, both before the election and then continuing into donations to the inaugural parties and all that. Like, we're talking multiple millions of dollars of gifts just from crypto, like up there with pharma and tech. And, Brian Armstrong, who's the chief executive officer at Coinbase and has done a lot of work with the Fair Shake PAC, has made it clear that the midterms...
That's the big crypto PAC.
The big crypto PAC, right? The midterms continue to be like a priority area for donations, for campaign support. And so JD Vance is rightly recognizing that the industry has said, we will keep showing up for you. And so, they want to be explicit about, thank you for doing so. Here's what else we have on the pipeline.
Well, they really have like an existential stake in this, right? Crypto, I mean, as far as being able to have access to different markets and regulations, it seems like this is a good investment for them.
I think if we go back to the kind of the Mark Cuban argument, and I'm not going to get into sophisticated political analysis, but essentially that comes from a place of what crypto allows people to do is like self-actualize financially in a way that's not intermediated by gatekeepers and having to have a broker or be rich enough to be a qualified investor. You can kind of go out there, do your own thing, and see the numbers go up. And that is a very powerful argument that has been used a lot by the crypto industry for many, many years. We are not the banks. We are not the government. We're in it for you, and you can also be in it for you. It's a very individualistic appeal.
Yeah, it's a powerful appeal. All right, Stacey Marie, thank you for being here. We'll have to have you back on soon next time something crazy happens in this world.
I'm sure it will.
Should issue a Stacey coin.
No.
Stacey, as you know, and as our listeners know, every week we pick an underrated story, a story that you or I feel like is not getting enough attention. And this week, I've got one for you. Okay, so it's about the apps. It's about Tinder. I guess Tinder has run into some troubles lately. Usage has gone down. The kids don't like swiping as much as us olds.
Yes, I think I have heard that younger users do not like dating apps because also apparently they don't like dating.
So,
that's what I've read.
Right,
I don't know if that's true. I'm not in that cohort, but yeah, I know that the apps have been having a terrible time.
Well, Tinder is in the midst of a turnaround, and to spearhead this bold pivot to the future, this attempt to win over the youngs, they hired the 49-year-old former CEO of Zillow, the real estate app.
That seems like a great move.
It seems like great if you're trying to win over millennials or Xers or the kind of people who look at real estate. I don't know that this is necessarily what I would have done if I were in charge of Tinder. On the other hand, Spencer Raskoff, the new CEO, he laid out the plan, and I'm gonna run through a few things. So his basic idea is that Tinder is like a bar. Now, bars go through phases. They start out cool, then they become uncool. Then the bar owner has to come in and renovate. This is the metaphor he used in an interview with the Wall Street Journal. Now, the renovation involves speeding up product changes, quote, leverage artificial intelligence. I don't know what that means, but I'm sure Tinder does. And boost user safety. They also have a new product feature in mind.
Okay, this I want to hear about. What is their new product feature?
Double dates.
Oh, God, that's the idea? Double dates?
Yeah. So I've been trying to puzzle through this.
Now you have to go out with 3 people you don't want to talk to?
I think you would pair up with a friend, and then you would match with 2 strangers. But this seems like it's like 2 times worse than a normal date, because You have these other players in it. And I also don't know, like, is this a thing that Zoomers do? Do Zoomers go on double dates? That sounds like very retro.
I mean, it just seems to combine two of our culture's most terrible things. One, trying to coordinate schedules with multiple people. And two, blind date.
Like a polycule thing?
Is it like a two wrongs make a right?
My assumption here is that what's going on, like you kind of hinted at it, there's sort of a bit of a backlash towards like social media. And Tinder is a social media thing. I'm trying to think back to when Tinder got really hot. And I think part of what made it cool, I've been married for a long time and not on the apps, so I'm sort of speaking from secondhand experience here, but it seemed like its integration with Facebook was kind of what powered it in the first place. And that's kind of like what it made it exciting, is you could see like which of your social connections you might have a match with. And I think that as that has become less important and as people have become creeped out by that, and maybe creeped out of, apps in general, it's just like, they just want to like get out in the world, go to Run Club or something. That was what the Journal suggested as the alternative.
I have used the apps in my sordid past, and what I will say is that it is like a uniquely awkward experience because the thing is there's all this choice, right? Like hundreds and hundreds of people, and you're swiping this way and you're swiping that way while you're watching TV, which is literally what everyone's just sitting there swiping. And then you have to go out and meet this person. It's just the strangest sensation because you have no context.
But
and all
Stacey,
of a sudden you're like on a date.
Don't you want AI involved in that?
That is the other problem, right? It's like three things that make everything terrible. Coordinating schedules with groups, blind dates, and AI.
Listeners, let us know if you have thoughts on this, either on the dating app business or dating in general. Send us an email, everybody's@bloomberg.net.
This show is produced by Stacey Wong. Magnus Henriksen is our supervising producer. Amy Keene is our editor. And Brendan Francis Newnham is our executive producer. Dave Purcell fact-checked the show. And a special thanks to Jeff Muskus. Sage Bauman heads Bloomberg Podcasts. If you have a minute, please rate and review the show. It would mean a lot to us. Thank you for listening, and see you next week.